Welcome back to the ConchEconomist, and we're continuing with part two of our interview with our mortgage expert, Joanne Zero, Zero Mortgage Company here in Stuart, Florida, but she does work all over the state of Florida. And in part one, we talked about getting the property qualified and the borrower qualified. Now that we've got everybody qualified, it's time to get down to nitty gritty here of actually putting the mortgage together and putting all the details together, and most importantly, the expenses and cost of this. So Joanne, welcome back, and let's talk now. In our first part there, we talked that one of the things we're going to need is an appraisal. We didn't mention what the cost of the appraisal would be.
Around $550.
Wow.
And an FHA appraisal can be a little higher, maybe $575, $600. And if it's a large piece of property, then you're talking maybe $700, $800.
Wow.
For the appraisal.
For the appraisal.
And the appraisal is one of the many closing costs you have when buying a home.
Right, and we're going to be talking about that now, but particularly those that pertain to the mortgage. Okay.
I'd like to just go over all the closing costs,
yes,
if I may.
And we'll assume a $100,000 loan here. Is that what we're going to do?
We'll talk about a $100,000 loan, but as a rule of thumb, anywhere between 2 and I'd say 5% of your purchase price is what you're looking at for closing costs.
Okay.
So that's a general rule, but there's a big difference between a $100,000 purchase price versus a $600,000.
Right.
So it comes down to the loan amount, I should say, but there's still a big difference on $100,000 versus a $500,000 or $400,000 or $300,000 home.
Right.
So closing costs are going to be start off with the appraisal. Some lenders do have an application fee. I do not charge an application fee. So then you have the appraisal. You have then the next thing would be the title charges, and the title charges can be expensive.
Yes.
So I would say a rule of thumb, the title charges will be possibly 1% to, I think more realistic would be, maybe 1.5% the title cost, but it depends on the loan amount. So if you get a really high loan amount, I would say under 1% for just title charges alone. And that's the closing fee. You have the title search, you have the owner's policy, the lender's policy. There's a lot that goes into that, and the title company sets those fees.
The title insurance has always been a sore thing with me. I can buy a $300,000 property, and I have to have title insurance if I get it financed. I can go out here and buy a $300,000 motorhome. I don't need any title insurance. And the motor are very upset about having to pay for title insurance, but that's part of our archaic system. But anyway,
another expense, you do have to have credit report. We have to pull credit, and credit reports are outrageous these days. Yes, I did start years ago, but a credit report used to cost $30. Last year they were $92.
Oh, good grief.
Now this year they're up to $132 per credit report. It's just crazy, but it's necessary.
And
so
who supplies the credit report?
We have a credit reporting companies.
Okay.
There's different credit reporting companies. You order that through them, and it's credit report is made up of Experian, TransUnion, and Equifax.
Yeah.
They all have their credit scores, and when you're getting a mortgage, they take the average of those 3 credit scores. So you have the credit report. A lot of times, maybe you have to pay for that in advance. Then sometimes you pay for that in advance. Then you have your loan underway. The next expense is going to be the appraisal. Then the title charges get ordered. You are going to need a survey if you are buying a single family residence or a townhouse. Condos don't require surveys. A survey can cost $425. Then you have, as Merle was talking about, we have the mortgage, and the note has to be recorded. You have to pay a recording fee. That's usually $300.
For the recording fee?
Yeah, well, maybe in the 280 range, something like that. But to record the mortgage, and then you have doc stamps on the mortgage.
All right, let's talk about that. Doc stamps on the mortgage. Tell me about that.
They are 35 cents per 100.
This is in Florida.
Yes, Florida.
All over the state. So
for a $100,000 loan, your doc stamps on the mortgage are $350. And then you have intangible tax, and that's 2 mils per dollar. So on a $100,000 loan, you're looking at $200 for the doc stamp, the intangible tax.
So,
Yes,
uh,
based on the mortgage.
the,
Sellers are responsible for the doc stamps on the deed.
okay, right. We haven't talked about the deed yet. Okay, so we have the documentary stamps and the intangible tax. This is money raising by the state, isn't it?
Yeah, yeah,
Yeah.
yeah,
I mean,
yeah.
these are state fees that are mandated by the state.
And Florida does have a lot of fees. Other states are cheaper for closing costs. They truly are. These aren't that expensive, but they all add up. You'll have a flood cert. You have to, especially
The
in
flood
Florida,
zone.
are you in a flood
Flood
zone
zone.
or not? So
Okay.
that has to be ordered.
All right.
Processing fees. Lenders have underwriting fees.
All right. What are we processing?
Processing the loan to process all the paperwork and order all the verifications. It's processing loan that can range maybe around $500 to $800, somewhere around there. Then you have the flood cert's not much money. What was I just going to say? Oh, home inspections. That is not required, but we encourage everyone to get a home inspection, and they run around $325 for a home inspection. But you wouldn't want to buy a house without getting a home inspection unless you're a general contractor and you have that knowledge. Come in and inspect it. So once you have a bilateral contract, that is when an inspection is ordered, and usually the inspection period is 7 to 10 days.
Okay.
So during that time period, you can get out of the contract, no questions asked. You get a home inspection, you just don't like one little thing about it, you can get out of the contract.
Okay. All right.
You have to get homeowners insurance. And the homeowners insurance, they require that be paid a year in advance. So homeowners insurance can be $2,500 to $10,000, $12,000.
Yes.
Obviously depends on the home. It depends on the condition of the home. How old is the roof? You could be buying a home for $250,000, $300,000. But if that roof is 20 years old, your insurance is going to be astronomical.
Okay.
It could be with a 20-year-old roof, it could be 10,000 or more. So it really does depend on the home, but that is another expense that has to be paid at closing. So $4,500 is nothing for homeowners insurance. So just another expense that needs to get paid.
Now, one thing I do know, you can get an insurance estimate on a property before you sign a contract.
Most definitely you can.
And that may not be a bad thing to do because insurance is not fixed. You may get a 30-year fixed loan for P&I, but that's the only part that's fixed. Insurance is not fixed. And the lender is going to take into consideration what the prorated monthly amount of insurance is. And you get an older home, you've got higher insurance, you've got a higher monthly obligation.
Yep.
Which is not going to go down.
Yep.
Your house doesn't get younger, your house gets older.
Yeah.
And insurance goes up.
Yeah,
so.
You can always, get a property address, call an insurance agent and
Yes.
ask them what the estimated taxes would be. Once you do have a house under contract and you get that inspection, then you're going to want to get, it's a 4-point inspection and a wind mitigation.
Yes.
And this is in Florida. And then those two things can, as long as they come back good, you can reduce your insurance a little bit.
Right. There can be ways to mitigate some
Yes.
of these losses.
So that's
yes.
that's another expense that you have to take into account. And then there are tax escrows and additional insurance escrows. So they'll collect extra months of taxes and insurance so that at the end of the year, there's enough money to pay the insurance. Because the first year you're paying, but the second year, then your lender's got to pay for that if you pay the taxes and the insurance in your monthly payment. You can waive escrows, which means every month you only have to pay your principal and interest. And then you're waiving escrows and you're paying your taxes and your insurance on your own once a year. A majority of people don't do that. So that's where the escrows come in. You pay that first year of insurance, but then you also have to collect an extra few months of taxes and an extra few months of insurance. And so depending on how much your insurance and taxes are, that can be another few $1,000s to add on.
As I recall, if I pay 20% down, I usually don't have to escrow, do I?
You do not have to escrow, but also now
down.
Things have changed. You could put 10% down and not have to escrow.
Oh, really?
One thing I want to mention is we're talking about waiving things. When you purchase a home and it's you're under contract and you order the appraisal. Well, before you order the appraisal, what we do is we run the file through an automated engine to see what kind of an approval you get. And so The approval can sometimes call for a property inspection waiver. And what that means is they're not requiring an appraisal. They're just basing it on the values, however they do. They have systems they look at. And what that's saying is, I believe the price you're paying for this house is worth it, and I'm not requiring an appraisal. So it saves you $550. If you wanted the appraiser, you can still choose to have that, but it's not a requirement. So that's
Interesting.
happening,
Interesting.
more and more. I
Okay.
just am doing a loan for somebody right now, and I was quite surprised, but we did get a property inspection waiver
Interesting. Now, was this for a conventional loan or an FHA
for
loan or a
conventional.
conventional loan?
FHA, you'll
Okay.
always be
You
required to
always
do
got
an
to have an
appraisal.
appraisal. Okay.
Yes.
All right.
Yeah.
Interesting. Interesting.
So the closing costs can add up, but you can also get the sellers to pay closing costs or a portion of closing costs. And
Okay.
that's where a good realtor comes into play, where they can negotiate with the seller to pay $5,000 of your
Toward the
closing
closing
costs,
costs. Okay.
$10,000 of your closing costs. So if you don't have a lot of money to work with, there are still options out there. There are I have 100% FHA loan that's available. It's broken up into a first and a second mortgage. That's an excellent, mortgage as well, and it allows you to buy a house with not that much money down.
Wow.
The FHA only requires 3.5% down, and that can be a gift. So if you're young, newlyweds, just starting out, and you want to buy a house, and you
House.
have a parent who will, give you the money, 3.5% down, you could buy a house.
That's
You could
nice.
have the sellers pay closing costs, and you could basically buy a house for little or no money down. Because your
So
contract's written with the seller agrees to pay $5,000, $8,000 of the buyer's closing costs.
interesting. Okay. Well,
All
I
right.
sure hope that we have helped first-time home buyers understand the ins and outs of getting a mortgage. And thank Joanne for her expertise and her experience and willingness to share it with us. This has been very
Absolutely.
informative, Joanne, and I hope
Thank
it
you.
encourages people to take that step and make 2026 the year they buy their new house.
Yeah, please feel free to
And
call
call
me.
and call Joanne. What's your phone
My
number?
number is 772-284-0725.
Great,
Even if you're not in Florida, I'd be happy to answer questions for you, and I can connect you with a mortgage broker in the state that you're in. But
great.
it's really important to get pre-approved and have a good understanding before you even try to buy a house. And just one other thing, I can help you to improve your credit as well.
Well, thank you for tuning in. And if you haven't seen part one of this, please take the time to do that because Joanne went through some very important things there on qualifying the property and qualifying the borrower. So thank you very much for tuning in to the Conch Economist and our continuing series here on buying a home in 2026.